Alright fams, so welcome to day one of me teaching about the VIX strategy. Alright, so today I'll be giving an admonishment about how the VIX strategy actually functions when you trade in it. Alright, so like I said in the last video, though this is the first video now about me teaching about the VIX strategy, but like I said in the last video, we have 5 confluences in the VIX strategy, just 5: market structure, fair value gaps, order blocks, Fibonacci retracement tool, and you have to understand liquidity concepts. You understand, like ASEAN highs, clearing of double tops, trend line liquidity, and thereabouts. Just those simple concepts. So now I'm going to be showing you how it works. Remember, in later videos, I'll be going in details about market structure. I'll teach you about market structure, regardless of the fact that there are a lot of market structure videos in the YouTube page already. But based on the fact that I want to be merging everything now to know how to understand the VIX strategy, I'll be talking about market structure again, talk about liquidity, talk about Fibonacci retracement and how to use it, how to use fair value gaps, how to use order block, and how to understand market structure. Understand? So without too much, let's go to the screen right now. Let me go to my screen. So this is how the strategy actually really works now. It works with, number one, you have three major tools you have to draw. You have to draw your Fibonacci retracement. That's very, very compulsory for the VIX strategy. Then you have to look for an area of fair value gap or order block, not fair value gaps and order block, or order block. You have to use one, either fair value gaps and order block. You understand? And market structure. Market structure. You have to be trading along with the trend. We don't trade we don't counter trend using the VIX strategy. You understand? So now this is a bullish trend right now in my left side of the screen. This is a bullish trend and this is a bearish trend. So in the bullish trend right now, we have our higher highs, higher lows, higher highs, higher lows, and higher highs. That's for a bullish trend. So now remember, I'll still talk about market structure again. I'm just showing you guys what the VIX strategy look like and how easy it is to understand. So this is a bullish trend now. Out of the 5 conferences I actually talked about, market structure, I'll say it again: market structure, Fibonacci retracement, fair value gaps, order blocks, and liquidity. Out of these 5 things now, we've identified one already, our market structure. We now understand the main trend of the market is uptrend. Market structure is down now, left with 4. Remember I said fair value gaps or order block. Now we'll draw a Fibonacci retracement tool, right? We'll draw a Fibonacci retracement tool from a swing high, we'll draw from our swing low to our swing high. I'll teach you guys how to use the Fibonacci. Once you've drawn your Fibonacci retracement tool, the main points we're looking for in our Fibonacci tool is the 50.0 and the 61.8. Don't stress yourself about understanding the strategy now. This is how it works. I'll teach you guys how to understand it very well, but this is how it works. Our main interest now our point of interest now in the Fibonacci is the 50.0 and the 61.8. That in between the 50.1, let's say in between the 50.1 and the 61.8. Okay, let me draw something there. In between the 50 points, in between the 61.8 and the 50.0, we draw a point of interest here, like an order block or a fair value gap. Let me just how I actually really. Sorry. Okay. No. Let's paint this gray. All right. You're going to mark out that spot there. You understand? Now we will make sure remember we're buying in a bullish market and we're selling in a bearish market. So now look at something. This is what we call a trend line liquidity. Now we're waiting for market to take out liquidity, come into our Fibonacci zone of 50, in between the 50.0 and the 61.8. Then it's a bullish market. That's 3 now. And the last confluence is that it should actually really reach where a fair value gap or an order block is. And in places like this, there are always fair value gaps in places like this. So we'll make sure price has taken in liquidity. This is a trend line liquidity here. I was explaining all those things, but just be familiar with the strategy first. You understand? So make sure it has taken out liquidity, like it has swept through liquidity into your fair value gap, and make sure your fair value gap is, let me say this one slowly. Make sure your order block or your fair value gap, now for this example now I'm using a fair value gap. Make sure your fair value gap is aligning, is where the 50.0 and the 61.8 Fibonacci tool is. That's a very high chance Q zone. When your fair value gap is in the same level where your 50.0 and 61.8 Fibonacci zone is, that is what we're looking for. And make sure the market has cleared liquidity. That's all for the VIX strategy. Like seriously, don't stress much. Number one, write these things down. Number one, you make sure you identify the trend of the market. Is it bullish? Is it bearish? Once you've identified the trend of the market, you make sure the market has taken out liquidity. Like seriously, make sure it has swept. Is it trendline liquidity? Is it ASEAN highs? Is it double top? Is it double bottom? Make sure it has swept some kind of liquidity first. I'm talking about liquidity. Then number two, when you draw your Fibonacci retracement tool, make sure the market is in between your 50.0 and your 61.8 region. That's the third confluence. And number four, make sure your fair value gap or your order block. In this situation now, it's your fair value gap. Make sure your fair value gap is in the same area where your 50.0 and your 61.8 Fibonacci tool is. Once price reaches that zone where your 50.0 and your 61.8 your Fibonacci is, and it's still aligning with your fair value gap, that's where we'll take our trade from. Yeah, in this scenario now, we take our buy in this place, all right? We take our buy in this place, so that is for a bullish market. You understand? Now for a bearish market, once you draw your Fibonacci, now once you've identified that the market is bearish now, for instance, you've drawn your Fibonacci from, your lower high to your lower low. You understand? Don't mind my drawing. Then you've identified your 61 point. Let's say this blue line here is your 61.8 Fibonacci region, and this one here is your 50.0 Fibonacci region. Let's just draw some kind of thing there, some kind of area there to make sure we're not confusing ourselves. Let's just mark it out. All right, so oh dear. All right, so now for this bearish market now, remember in the bullish markets, liquidity took out trendline liquidity. Now the market has taken out double top liquidity. This double top, this top and this top. Market has taken out double top liquidity. It has entered inside the region of 51.8 and 61.8 and 50.0 Fibonacci region. So the last thing you're going to look for now is any other block of fair value gap in the same place where that 61.8 and 50.0 Fibonacci retracement tool is. If there's an other block there or a fair value gap there, that's a higher confluence, then you can take your trade. You understand? So that is how the VIX strategy is. It's nothing much. You don't need thousands of videos before you understand the strategy, but you need to understand all these concepts very well. Understand them to the core. These 5 concepts: market structure, liquidity, Fibonacci retracement, fair value gaps, and other blocks. That's just all for the strategy. This is what I trade. This is what I trade, like seriously. So let's go to live chat now. So I'll be giving just one example because I don't want this video to be too long, which is already too long. So now let's identify the trend of this market now. Okay, this is a bearish market, all right? This is a bearish market. We have our swing high here, swing low here, you understand? So now, this number one, we spotted the market. This is a bearish market. Now bring out our Fibonacci retracement tool. Let's draw it from this swing high to this is the latest swing high to the latest swing low over here. Yes, extend it to the future a little bit. Let's keep it in mind that price has not done all this yet. Price has only given us this. You understand? So now let's see if price has cleared any liquidity. Okay, let's first mark out our 61.8 and 50.0. Let's mark that out. All right. So let's bring our object, insert objects, shapes, rectangle, and let's mark that area out. all right? That area in between the 61.8 and the 50.0, you mark that place out. And, all right, okay. Draw my fib very well. Okay, let's extend this down, and that's basically, oh, sorry, this is the latest swing. This is the latest swing here. All right, this is the latest swing here, not this one here. Then my order block has to come down to the 61.8 and the 50.0. All right, you don't need like an hour plus to analyze the strategy, but you have to know what you're doing. All right, so this is it here. You've marked your Fibonacci, you've marked out your 61.8 and 50.0, and see what happened. There's a fair value gap here. A fair value gap is more of like an imbalance in the market. You understand? Just a gap. Like 3 candles there, you see 1 candle here, the 2nd candle here, and the 3rd candle here. This candle in the middle, that space in between it, that's your fair value gap. You understand? So this space between it, and guess what happened? Market, this is what they call a trend line liquidity. All right, let's draw a trend line there. Sorry, let's draw a trend line there, and there's a trend line, and guess what happened? Markets broke through it, and this is where we're going to take our sell here, put our stop loss slightly above the 61.8 region, and this is what we will have caught in the market. That lovely expansion to the downside. So that's basically all the VIX strategy is all about. You understand? I know it might sound boring now, because like, to the newbies now, we don't understand anything that this guy is trying to say. But believe me, once I talk about market structure, talk about Fibonacci retracement, talk about liquidity concept, fair value gaps, and order block, you will know that this is one of the most easiest strategy. There are thousands of strategies, but this is one of the easiest, and it's pure price action. See my chart, look at how neat my chart is. There is no clumsy indicators here. There are no kind of indicators here, and that's just basically it. And I know you will have gotten 1 or 2 concepts from what I said right now. You're not ready to trade yet, newbies. Like, just focus on the grinding. Just focus on the grinding. You've learned about Fibonacci, or probably now you just want to run to your chart. Fibonacci will work for you 1 or 2 times. It will make you not to learn again about other concepts in the market, but just focus on the grind, guys. Focus. Let's study. Let's go through this journey together. So in the next video now, I'll start talking about market structure. Market structure is the first thing I'll start to talk about from. You understand? After market structure, I'll talk about FIB. I'll talk about order blocks and fair value gaps. Liquidity will be the last thing I'll talk about. All right, so that's basically that about that, guys. Cheers, and God bless.